And good evening. This is the Elliott Wave update for the NASDAQ 100 and the S&P 500 for Sunday, March 19th, 2023. Globex has reopened and they're a little bit enthusiastic because United Bank of Switzerland has agreed to purchase the Credit Suisse for $3.3 billion. And so the market's a little bit exuberant. It's like, yes, we got a banking save. Yes, everything is fine. And it's actually not. I think it's a little bit overreaction. So I'm going to turn immediately to the technicals, which kind of follow through, because where we left off yesterday when I was doing the cash market within the NASDAQ, the NDX, did show that what this level completed was wave 3. I had not put in the wave 4, which I will do now because it did take place on Friday. So we have the 3 and the 4, and now we're inside that 5th. And the 4 is actually here. And so we have 1, 2, we're in the 3rd of wave 5, I believe. So that's why we're kind of like heading higher. Got to buy it. We're hitting first resistance at 12,753. We are well above that. We're at 724, so we have that 53. And then we kind of break, and then we have the first high from Friday, which is 12,811. Now we have where wave 5 and wave C kind of have an overlap. And that is right there at 12,867. So we have 63 to 67, 68. So we're going to say basically, let's call it 12,860 to 12,870. Next up then, 12,920 to 12,960. That would be the next thing. That, I think, should contain the move, to be very honest with you. In fact, I'm really thinking that this one should contain the move. And possibly don't know if it'll all happen today, and then we just kind of wander around up here for Monday, Tuesday, and Wednesday, because the Fed, their decision will be known on Wednesday at 2 p.m. Eastern. So, but there's a lot of other things going on in between, which are going to drive the market both directions, I believe, so the volatility should remain high. Again, in the NASI, still looking for a little bit more upside. That's how I left it on after Saturday's big picture update. So with the cash market showing the same thing, I'm going to stick with it. There's our resistance. There's our next zone. I'm not looking for a major push higher. I do not buy into any narrative that's going to tell me that the banking crisis is all contained and that really what the Fed needs to do is ease to rescue that, because that's what they did in 2009. 2008, 2009. Well, guess what? Also at that time and today, different Fed agencies using FDIC, using the Fed, using the Treasury, different agencies and components and people from all of those areas coming together, and they're handling. So there's a whole nother agency with a whole nother budget and a whole nother amount of money to deal with the banks. And the banks that are actually having problems with their, deposits. And there's so much behind that. It's a whole nother podcast, and I'm not going to even go into it now. But again, this is another Fed-created problem that they never went back and corrected. Is back at when the pandemic was first kicking in, and everybody had to stay home. And we saw this massive negative reaction from the market. The Fed dropped the requirements for how much money had to be held on reserve. So there were no reserve requirements. They were dropped. And they've been pretty high in the past. And they haven't replaced it by reinstituting the rule. So it's like they weren't under any obligation legally or even just Fed-wise to keep that amount of money on hand should something go wrong with the position. So again, Fed generated. But again, how could it's only Silicon Valley Bank? It's only Credit Suisse? It's only Key Signature Bank? It's only Silvergate Capital? I doubt it. So overreactions, but technically we look for the move. We're looking for the move to end. But should it continue and just keep on going? No. We're in a very serious situation. So I believe we're going to go up. We're going to finish. We're going to finish the C, finish the minor two, and roll over. And don't have to worry about playing dead. It'll do it all by itself. Now, over in the S&P, basically the same story, except in the S&P, it does appear that minute wave 2 is over. So again, minor wave 2 been long done. In the S&P, we've already done. So we're already down and started this third wave. I know it's strange and they should be equal, but they're not. So it's minute 1, minute 2. We're into that minute third wave, but within it, it looks like what we did was a 1, sub-minute wave 1. Maybe we got a wave 2. We've got a little bit more. Our next resistance, 39.92. Kind of getting past that hourly 200 right now, kind of playing around it. We still got these now starting to turn up. That all works. The 200s are flat, but I'm really not expecting it to go and try to make a new high above what we saw on Friday, which is 4,009. And that was during Globex on Friday. So we'll see. So again, it should continue to go higher because they're going to push them all. And we'll see how this all opens tomorrow. The Dow recovering because they got the pants kicked off of them on Friday. Bond market continues to play between being a down 20 to down 20 pips to down a point and 2. So they're starting to pick up on it. Like interest rates, not going to really do what everybody thinks. So, and then we'll see what the markets do. So again, here, I do not think we're going to get back. We could get up close. We could even get to 4,000. We could get a little bit higher, but I really don't want to see it break 4,009. It's going to make this a very strange type of account. And I'll just have to back it up because this would have to be fit into somewhere into this. And I'm not sure how far back I have to go to complete that or to create that. We'll see. But right now, I'd look for a little bit more higher. If it begins to come off, these are the levels it needs to start coming down through. And I believe the S&P, as I've been talking about for a while, that initial rejection should be additional and break below 3,900 pretty quickly. Now, whether this is a 1 and a 2, and if it is, and we stop and we start to go down, I'm going to be looking for it to break 3,900. If it does tomorrow, it may break 3,900. It may get down to 3,865, whatever, and then put another little rally in. So we got a lot going on and a lot to chart out. So, but for right now, I'm kind of going to leave it that we may just absolutely move sideways, up a little bit, down a little, up a little, and maybe expand the range on both ends. We still have the Asian markets to open, then we have the European markets to open, and then it's back in the US. All right, I'm going to leave it right there. Everything that I presented yesterday remains, of course, intact. Bitcoin, once again, being bid up based on the saved Credit Suisse. Again, I don't see that correlation. Why a digital currency where you get nothing suddenly is being supported as if it is a major player in the inflation game, in the interest rate game, that something there has something that can be equated that the market should rally because Bitcoin's rallying. That I don't see. Somebody's going to explain it to me. I have a feeling. Anyway, our next update will be on Monday, March the 20th.